Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Big shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. Thank you very much. If you're new to the channel, smash the subscribe button down there. Turn on that little bell notification as well, because I love doing these videos on a daily basis, documenting my journey with investing, with cryptos, dividend paying stocks, growth stocks, talking about passive income, building financial freedom, and yes, my goal at the end of the day is to build generational wealth. So come along this incredible journey. It's been incredible so far and we're just getting started. Also, if you can give this video a thumbs up, watch it straight through. It would really help me push this channel out to a lot more people, because the YouTube algorithm is absolute magic when you do that. Give it a good old thumbs up down there. Also, little disclaimer, I am not a financial advisor. Please do your own research and due diligence with this stuff. It can be extremely risky and volatile. I do not want to see anyone get financially hurt. Please be careful. Do not take what I say in these videos as financial advice. And my golden rule is I only invest what I can afford to lose. That is it. All right, now the formalities are out of the way, ladies and gentlemen. Now, I'm going to do a dividend stock video update today. And yes, I use the app Stake here in Australia. There is a referral link below. Please feel free to use that if you wish. Please do your own research. You can get a stock in Dropbox, GoPro, or Nike. And yes, I've got a significant amount of GoPro, Dropbox, and yes, I've got a share in Nike. So there you go. Thank you very much to every one of you who have signed up using that code. Anyway, so I have been a dividend stock investor for a while now. I've managed to get my portfolio up to $35,144.63 USD. Now, for us to buy US dollars, we lose literally 20 to 25% of the Australian dollar to the US dollar. So it is quite difficult. And yes, I have been diversified in my investments, moving significantly towards cryptocurrencies, because I've seen some pretty incredible returns with cryptos. But again, dividend investing for me is just a form of passive income and growth for long term. Literally, I will never sell my positions that you see right here. They will be handed down to the future generations, and I'll make sure of that. Anyway, so it's some pretty incredible stuff here. The stock market has been extremely volatile because of the situation in Ukraine and Russia. Last time the volatility occurred was obviously, the start of 2020, when the situation happened around the world. The stock market completely crashed, and literally I took advantage of this literally all throughout 2020, 2021, and I'm still doing it today. Even the situation going on in Ukraine and Russia is quite horrible. It's devastating, but there is some really good opportunities to buy right now in the stock market, especially if you're looking for those bargains. So let's have a look at my portfolio on the day being Friday. Obviously, the markets are closed over the weekend, very different to cryptos. The market return for me is 2.44% on the day. $836 US dollars, which is really nice. There was a huge rebound in the stock market, given the sanctions weren't as tough and as hard as what a lot of investors around the world thought they were going to be. That is why there was a massive rebound in the entire market. Now, in total returns, I've had a total return of 23.16%. That is big in the traditional stock market. Just putting it out there, it's very different to cryptos. It's obviously a lot less volatile. It's regulated, all kinds of stuff. It's very different. 23% return is incredible. $6,606.88 USD total returns. Now, mainly my portfolio consists of dividend paying stocks, and the main ones that I took advantage of during the dip was ExxonMobil. ExxonMobil absolutely got slammed during 2020, and you can see right here that significant drop. It went from a peak of 2019, $70, right down to this bottom part right here you can see on the chart. If I can get my finger to work. Let's have a look here. It dropped down to about $39 there, you can see right now. So, I mean, I bought the dip all throughout 2020 and it just continuously rose, which is incredible as well. And basically in the last year, it's had a total return of 43%. My portfolio has had a return of 58%. I've made $2,959.47. Now, with regards to the dividends have been incredible with ExxonMobil. It pays a dividend yield of 4.64% right now, which is really nice. I like to go for companies that have dividend yields of around 2 to 5 max. Anything above that can be extremely risky. And the reason why is because if they are going, incredibly high on the dividend yield, a company can cut that dividend. Literally, it happened with Carnival Cruises, it happened with Ford, A few other major companies also cut their dividend because they chose to protect the company's, equity right there. Instead of paying it out to their their shareholders, they chose to reinvest that money back into the company to protect it. So a lot of companies can cut their dividend if the dividend yield is extremely high. So just bear that in mind. But ExxonMobil is a quarterly dividend paying company. They pay me every single quarter, every single year. It doesn't matter what happens, they pay a dividend, which is really nice every quarter. Now, the other ones that I'm very big on at the moment, obviously, is SPHD. Now, this is an ETF, which is an exchange-traded fund. Think of SPHD like a basket of stocks. So the S&P 500 is 500 companies. SPHD picks those 50 companies of that top 500 companies that pay high dividend yields. So SPHD is at $45 right now. And yes, again, if I go to 2020, you can see that insane dip right there. It went to $27 a share. You can see that roughly around there. And then obviously it just went parabolic, and again, with the increase. Now, I currently have equity in there of $4,752 USD. I've had a total return of 14%. $613, and the yield on SPHD is 3.25%, which is really nice. And again, they pay every month with their dividends. So at the end of the month, every single month, I receive a dividend payment from SPHD. Now, my ideal goal would be to get it to the point where the reinvested dividends every month would allow me to buy 2, 3, 4, 5 shares every single month. And that would just compound over time with the price of the stock, my dividend income. It just continuously grows. So that's the beauty of dividend investing. Very different to growth stock investing. Some other big ones, obviously, for me, has been EPD as well, Enterprise Products Partners. They are a midstream company that do a lot of gas supplies. It has had a dividend yield of 7.97%. Again, if you look at on the charts from 2020, it just dropped significantly, guys, to like $13 to $14 right in USD, which is incredible. And in the last year, it has had a total return of 11%, which is really nice. Now, I've got equity of $1,643 in EPD. It has a dividend yield of 7.97%, which is getting on that higher scale. They have increased dividends, which is really nice. And again, I've had a total return of 4.29%. So not that great, but again, I love the dividends coming from Enterprise Products Partners. The other one here is At&T. Which again, I've been dollar cost averaging into. Now, there's been a lot of stuff out there in the media about their partnerships with Discovery and Time Warner, HBO. I mean, there's a lot going on with At&T. However, At&T is a cash generating machine. They have a lot of cash flow, guys. So again, I think At&T is incredibly undervalued right now, although a lot of people are saying to avoid it. It's got a dividend yield of 8.95%, which is incredibly high, and the dividend cut is coming this year. Obviously, with a partnership with Discovery and Time Warner and all that, that is going to be affected as well. There is a spin-off happening as well, so I believe you will receive some shares in Discovery as well, so that's going to be interesting to see what happens there. I've had a negative return of 12.83%, so I've lost $246. This is why you have to be careful with these kind of investments. You don't invest more than you can afford to lose. But again, At&T for me is, I think, going to be a very good play long term because they are a cash generating machine. 67% of analysts are saying buy right now. And you can see the revenue that they're generating as well, which is really good. And their balance sheet, I'll have to get into that, but it is growing every year, which is nice. So again, At&T for me is a good play. The other one I'm looking at to buy more of is Intel. I think Intel is incredibly undervalued still, sitting at $47 a share. I own 8.8 shares of Intel Corporation, and the dividend yield is 3.13%, which is, for a tech company, it's quite high. Given the fact that a lot of tech companies have very low dividend yields, like Apple, for example, is like 1%. To see 3.13% from a tech company like Intel is awesome. And again, I've had a total return of negative 8.42%, so I haven't made a great return, but I think Intel going into the crypto space is going to be very nice as well. And again, the world is demanding new chips every single day, microchips for PCs, Macs, computers, whatever it is. It's only going to keep growing in the future because everyone's on tablets, PCs, the internet. Everyone needs microchips. So again, Intel for me is incredibly undervalued right now. What else we got here, guys? Also, just the Apple stock as well. You can see it's 0.5% in terms of the dividend yield. But guys, in terms of the overall returns, 277% is absolutely ridiculous. So again, it is like a growth stock, and I think Apple's going to be an absolute monster in the future. Obviously, the other sectors are Ford, for example. I would have loved to have bought this stock during the 2020 crash. Given the fact that it just was like, $5 to $9 around there. I mean, in the last year, it's had in the last year, it's had a 52% return. So again, I should have bought that through 2020, and it is got a dividend of 2.33%, which is really nice as well. Really helps that passive income. Some other ones here, guys. Obviously, Tesla is, still one of my, biggest value, in terms of growth and seeing those returns. I mean, if you have a look here, if I go to the last year, it's had a 20% return. And again, I've made 73% on my money, which is really nice. They did have a stock split. So I bought 1 point something shares in Tesla. The stock split occurred, went from like $2,000 for a share of Tesla to like $200 or $300 USD. So I bought more. I'm currently sitting on 4 shares of Tesla, 73%, $1,394 in returns, which is ridiculous. And they do not pay a dividend. It is a growth stock. And obviously the other one here is NIO, which is the Chinese-based Tesla electronic vehicles sector as well. I think is a good play. I've got 30 shares or 31 shares of NIO. I've had a total return of 27%. They do not pay dividends. This is a growth stock, $140 in total returns. But I think, the energy, the EV sector with cars is going to be absolutely massive. It's nice to see Ford getting into the space, NIO, Tesla. There's going to be other competitors as well. But I think given the fact that the situation with Russia and Ukraine at the moment, prices of oil are skyrocketing to over $100 a barrel right now, which is crazy. I mean, fuel prices, I put a post up on my page, $2.27 a litre for fuel is ridiculous. It's getting to the point where a lot of families are not able to, put fuel in their cars to get to work. This is what's going to happen in the future if this continues. So just bear that in mind. I think electronic vehicle stocks are a good play. The other one I'm looking at, obviously, to add more on is Lockheed Martin. And yes, this has got a lot to do with, manufacturing of, major, defense systems, armory and all that sort of stuff, weapons for the United States. They do secure major contracts with the US government, which is incredible as well. And they also do pay a dividend yield of 2.83%. I did invest some money into this, guys, very little. Obviously, my equity is $44. I just bought it to put it on my list of portfolio to acquire and accumulate. So Lockheed Martin is definitely one to buy, considering all this conflict going on at the moment. Could be a good play. So Lockheed Martin sitting at $409 a share in the last year. It's had a 24% return. Anyway, that's pretty much it. And I'm going to get into my dividend tracking app right now, because I think that's very important. Here's my dividend tracking app. It is available in the App Store in iOS. I'm not sure about Android. I'm not affiliated with this company or this app. I just use it because it's better than paying Simply Safe Dividends, $300 US every single year for their subscription. I think if they did a monthly subscription of like $10 to $12, it'd be much better. So I found this as an alternative. So again, it is Div Tracker on the App Store. My annual dividend income is $1,731. Monthly is $144. Daily, $4.74 a day. I can officially buy an espresso. Yield is on average 4.34%. In 2 days, I'm going to receive dividends of $1.04 from Gain, Land 12 cents, OXSQ of 30 cents, and LTC Properties of 7 cents. Yes, it's not much, but guys, it's growing. Here are my top dividend payers, obviously. You've got Exxon Mobil paying me $500 a year. That's down slightly today. SPHD, $225. EPD is a quarterly pay as well, $177. O Realty is $144. AT&T pays me $107. Prospect Capital, $104. VYM is $84. Stag, $60. KMB, Kimberly Clark is at $34. AGNC. WBA is another one I'm looking at $24. That's pretty much it in terms of that. I can go on forever with my massive portfolio of stocks. My goal is to reach $100,000 of dividend income. $1,731 is currently my dividend income. If my cryptos take off and go crazy, I will take that money. I will put it in the stock market like this to receive passive income, as well as stake my cryptos as well. Just putting it out there. 29% comes from energies and minerals companies, and dividends receivable this month is $159. So again, big dividends are coming up now in March. It's going to be really nice. My portfolio is valued at $48,531.93. I've had a total return of $8,634 Australian. This is converted to AUD. Here are my companies right now, and I love doing this, going straight to the bottom. 10 years, guys, if I didn't do any more of my own investing, meaning putting in money every single week, the portfolio would be worth $82,000 and it would bring me $5,362 a year. Now, in 20 years, this is where compounding comes into play. The eighth wonder of the world, it would be worth $240,000 and it will generate me $26,000 a year, which is roughly about $350 a week. So that's really nice as well. Here's my monthly income. I'm yet to still continue building up the low months. January, April, June, July, October, and again, they're the months that I need to continue to build up to bring them up to that $144 a month. And obviously my big month is going to be March. This is going to be my biggest dividend paying month. ExxonMobil is going to be an absolute monster at $125, which is really nice. It's going to allow me to buy another 2 shares in the company, which is good. I'm obviously getting paid here small amounts, $5, $12 from O Realty. Prospect Capital pays me $8, etc., etc. But that's pretty much it for my entire dividend portfolio. Yes, I've been mainly focused on cryptos right now because there's some crazy stuff going on and I want to see those multiples. But again, I'm still dollar cost averaging every single week into my stock portfolio and it's been incredible. Link below, guys, if you wish to sign up. Have a great weekend. I'll put a crypto video up very soon, all right? Stay safe. Peace, bye.